Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, hit that like button, and share these videos. Tuesday's action started off in a very robust fashion, printing up to the numbers that I discussed in yesterday's report. Unfortunately, the last 2 hours, heavy selling came in, pushing the market down to close about in the middle of the session, but above some key support levels. Because of this, it has placed the market in a very vulnerable position once again. Over the last couple of days, I talked about a 2-day rally and then a resumption of potentially 3 to 5 down. That is starting to look like more of a possibility. I'll cover this in detail in a few minutes in the technical section. But prior to the open today, we're going to start to looking at rear view mirror that I've been talking about. Today, prior to the open, we're going to see the ADP employment numbers, which are expected to show a minus 21 billion. While everyone's expecting this to be the case, and it should be baked in the numbers, market participants are going to have to start looking at the realities of what's going on during this shutdown. We're also going to see on Friday the unemployment numbers expected to come in somewhere between 12 and 18% unemployment. A number greater than 18% will certainly shock the market. Looking back to March 26th, our short-term models have been long during this time, but we're starting to see some real vulnerability come into the models. We're also seeing our short-term database get very frothy. It is now 62% long. Somewhere between 62 and 74% usually is where we'll see a turnaround in the market. One of the other factors that are likely to affect the markets today is crude oil inventories, which are expected to show a further increase. Depending on that increase, it could trigger a shock wave through the markets, causing some selling in equities as well. The optimism around the country reopening is just that, it's optimism. There's no realities to it as many states continue to be locked down, as you well know. It's likely we're coming into a top of this particular sequence. We'll finally begin some corrective phase. Let's take a look at the charts and see what's likely to happen over the next couple sessions. As I mentioned in the opening comments, the equity markets are becoming vulnerable to a reversal to the downside. There are two major support levels to consider. The first is that the 10-period moving average, which on the futures is 28.57, and then the next level is 28.13 and then 28.02. Those are the critical levels below the market. Now PPM1 is continuing to show a positive tone, which is at 0.31, and PPM2 is at 0.39. Anything above 0.25 is still a trend, but what we're seeing here on the PPMs is that they're starting to break their first and second derivative. This is the first sign that a possible right shoulder is setting up. Now, yesterday's high will be key, which is at 2889.75. Penetration would set a further move toward the numbers that I discussed last night, 2920. Now, with the ADP numbers and other information coming out before the open, it'll be interesting to see how this plays out. We are seeing some strength as we come into the opening of London. The previous 3 sessions, we saw some selling coming in, but this appears to be reversing a bit for tonight as there is a decent bid in the market. Today will be a pivotal point in the charts. It will take a close above the 2890 level to signal a continuation, and a close below 2857 would suggest further downside possibilities. Let's discuss what the downside possibilities are. Would be going back to the 2661 level, which would be a test of this 40-period moving average that is in green right here. There's key support below the 2857 level at 2813 to 2802, and if that's broken, then the next level is 2744 down to 2708, and the extreme now is 2675. The numbers that I'm discussing tonight have come up several times over the last 2 weeks, but this pattern is probably the most vulnerable to a decline that we've had, but it is still a very pivotal point. The configuration suggests if we can't trade above the 29.20 level in the next two sessions, that a decline is likely to occur, testing these support levels I just mentioned and potentially starting to trade down toward the 27.44 to 27.08 levels. This lack of momentum is very concerning, not to mention that we are trading just below the 200-day moving average, the 0.618 retracement, several other values that come up in our quant software that are projecting a cluster of resistance above the markets. Looking at the cash market, you'll see the market reversed and closed near the low of the session, but closed right above that 28.5695 level, which is the 10-period moving average that is showing a 0.46 number. Now, we were looking at the futures a minute ago, and that number has decreased from 0.46 to 0.25 in spite of the strength that we're seeing in the futures overnight. Will set up further potential weakness even if the market manages to open higher. The PPMs that you see on the cash market will reverse tomorrow even on a higher close, which continues to be a major divergence at these levels, suggesting the vulnerability that I talked about in the opening comments. So in conclusion, we're still locked in a 29.20 upside range, 28.02 on the downside. A break under 28.02 will set the tone for declines down to 27.44, 27.08 with an extreme of 26.75. Taking a look at the gold market, we continue to see this pattern that's unfolding with a wedge forming at this upper level. The PPMs down below are all showing a collapse of momentum, which suggests that the likelihood is for a move back below 1700 and potentially moving down toward the 1658 level. A close above 1737 will signal a breakout, suggesting we'll start to see the beginning of a wave 3 that I've been talking about over the past couple weeks. We're experiencing a 1-2-1-2 pattern, and this suggests that this is an ABC. A break above that 1737 number just talked about will move this market sharply higher toward at least 1800 to 1840 on the next move to the upside. My concerns is that these PPMs continue to be losing momentum, which suggests that there's still potentially one more leg to the downside. This will complete the broadcast. Remember to join me tomorrow at 1:30 p.m. Eastern Time for a live cast. I'll spend an hour going through a lot of details and answering your questions. Thanks again for watching.